So today we're going to be doing a trade breakdown of July 13th, 2026. We're going to be talking about the implications of trading during these 2026 market conditions, right? And the importance of managing your risk to a literal T. Now, obviously, this is a risk involved profession, right? So at the end of the day, you win some, you lose some. But what you need to do as a trader is preserve your capital and manage your risk to the most of your capability. Manage your risk as much as you can, right? Because there's going to be things like this, which we're going to go over, right? It's on the 3 minutes, so it might not look that bad. Let me drop down for you so you can get the insight, right? So yeah, just imagine this, right? There's going to be days like this where there's nothing you can do about it, okay? So what do I mean? Let's go ahead and just look at this candle, for example. This was a news candle that came out, I think it was 9/16. Okay, Trump tweeted something about Strait of Hormuz, the war, Iran, whatever. And just like that, we dropped 161 points just for price to retrace back up to our original TP. Now, do we hate ourselves? Do we blame the markets? Do we blame the systems? No. Why? Because what we could have done and all we should have done and all we should be happy with us doing is managing our risk appropriately. So let's break this whole thing down. Let's see how I managed my risk and let's see what was the end result for me today. And are we happy with our result? Do we have things to work on? Let's find out, right? Okay, so starting the day off, we were looking for price to take out these 4-hour lows, okay? So we had a direction in market by taking out these lows on the 4-hour chart. So we swept an area of liquidity. We were looking for price to retrace to the upside. This is what we wanted for the day, okay? Excuse my horrible drawing. Like I said, on the lower time frame, what we want to see is price changing states of delivery, okay? Changing the internal trend right after taking that area of liquidity. So this is London lows that also got swept, but more importantly, these 4-hour lows got took. Okay, cool. So after we took those 4-hour lows and we're looking for that change in state of delivery, we went ahead and created a fair value gap. Okay, 3 candle sequence, right? You should know this by now. Yep. So if you don't know this, there is some other videos that I have out that do explain fair value gaps, right? But long story short, 3 candle sequence, top of the third candle to the first candle to the bottom of the third candle. That's our bullish gap. We're looking for price to retrace into this and deliver to higher prices. Okay. Now, what was our targets? We had some options, right? One, all the way up here, right? That's not where we were targeting. We were targeting 1 to 3. So liquidity at top right here. All right. Some people were targeting higher, looking for fair value gap fills. Whatever their point is, whatever they were targeting, we were looking for higher prices. Okay. So going in, what did we get? We had our execution on the lower time frames, of course, right? We get a retracement. Price starts chopping around at our entry. No problem, right? We went ahead and get this first initial push all the way to our 1-to-1. Okay, so this is our 1-to-1 at this point. What we want to do is take risk off the table, right? Because we don't want to be in a situation where price is going in our direction because we're expecting higher prices, right? And we don't want to be in a situation where we're retracing back into either our entry or flipping bearish and getting stopped out, which is exactly what happens here, right? But how do we do this from a risk management standpoint? So we went ahead and took out these 1-to-1. So what I did was half my risk. Okay, so instead of taking a loss of 500 on this account, because we're copy trading accounts, right? So on this one account would have just been 500. So try to do the math, copy trading that across multiple accounts. It's obviously going to be a big loss, right? So we went ahead and reduced our risk at this point. Now we're only in this trade for a 250 loss, right? Something around there. Price takes this out. Cool. What is the next area you want to see? We want to see price take out this 1-to-2. We want to see price run over this low hanging fruit. These are things where we want to see price take for us to make a change in our risk management, right? For us to either put stops at break even, put stops in profit, things like that, right? But what ended up happening, we were about to take this 1 to 1.5, right? In which I wouldn't necessarily say I would move stops to break even, but it would obviously be more ideal for this type of trade, right? We get the confluences we want. We're getting prices pushing higher. And with the system that I trade, I rarely get price retracing to our entry point after I take my position. Okay. So this is not something I was really expecting, right? I'm not expecting any forms of retracement, right? I've sat through the heat. I did my part, right? I was disciplined through the chop and we were starting to see some profits, right? Okay, cool. So what was I expecting? I was expecting price to run to this 1 to 2, right? Depending on the volume we get at this 1 to 2, I'm either going to trail my stops to the bottom of this low, right? Or I was going to have stops at break even. Okay. But what happened at 9:16 exactly? This took less than 10 seconds, right? Trump does what Trump does, and market literally re-sweeps liquidity again for no reason and goes ahead and pushes all the way up to our TP. So this would have been a $4,500 trade, but instead we went ahead and exited this for around $250 on one account. So copy trading that's like $500, $600 loss, right? So tragic in sense of how it actually played out, but it was perfectly executed following our system, following what we were looking for. And the end result is just a numbers game, right? We're trading a system with a pretty good win rate, right? And as you can see, a pretty good risk to reward. And that's what trading boils down to. Managing your risk and having the numbers, having the probability carry you the rest of the way. Okay. So with that being said, I feel absolutely nothing, right? Did what I was supposed to do, coming to the market. Just like that, we live to trade another day. Okay. All we got to do is make one trade, one win. And just like that, we make back a 2.5 R, right? Because we lost only 0.5 R because we managed our risk. And just like that, we can easily make that back, right? Okay. So what I think a lot of traders fail to do is understand that, the name of the game is capital preservation, right? A lot of people are too focused on how much they can make right now. Some people don't even put stop losses, right? Imagine if you had no stop loss in the situation, you're getting ran through, and that fear factor. Imagine if you're like, oh my gosh, this is about to go all the way to hell, and you end up closing down here or down here or down here, right? Now you're losing double, maybe even triple what you would have originally lost, all because you had no system. You had nothing to get you out of the trade, right? Not just stop loss wise, but an actual system, right? For example, if you ran this with no stop loss, right, and you see such spike of volume, like, again, this is not what I would advise. You should have stop losses on your trade. If your system says, hey, any form of volume that's not, I guess, in our direction, we need to exit the trade immediately. That is something that you backtest over a couple hundreds of trades and see the reliability of that, right? Does this actually work over a long period of time? Did this work in the past? Can I apply it in the future? That's how you build an edge, okay? Long story short, understanding risk management, understanding capital preservation is what's going to keep you in the journey. It's what's going to keep you in the game long term. And that's what's going to allow you to actually see the profits and the results that you want to see when it comes to trading. Okay. L day, thanks to Trump, but we live to fight another day.